Hello, and welcome to DLocal Investment. This analysis is for DLocal on NASDAQ as of 31st of July 2026 with a share price of $15.14. The full report is on DLocal.ca. Maofais, a cheap emerging markets payments compounder in a confirmed uptrend. Payment volume grew 73% last quarter, yet it trades at about 13 times forward earnings with a 9% free cash flow yield. The one real risk is the August 13th earnings print, where fee pressure is the question. The business is genuinely rare. It is still compounding at hyper-growth rates while throwing off real cash. Last quarter payment volume grew 73% and revenue 55% at a 35% return on equity with about $396 million of free cash flow, enough that it now runs a $300 million buyback and pays a dividend. The blemish and the whole debate is the take rate. As DLocal wins very large merchants, those clients negotiate lower fees, so its margin has slipped even as volume booms. For a business growing volume at 70%, the valuation is low, about 13 times forward earnings, a price-earnings to growth ratio well under 1, and a free cash flow yield near 9%. Analysts rate it a buy with an $18 target, roughly 19% above the current price, and recent targets have been rising. In other words, the market is discounting the fee compression worry rather than the growth, which is exactly where the opportunity is if the take rate stabilizes. The chart is clean. Every time frame is in an uptrend, and price is back above both major moving averages, so the technical entry is confirmed. The catch is timing. Second quarter earnings land on August 13th, and the take rate print has gapped this stock in each of the last 2 quarters despite beating on the top line. So the short-term call is a buy, but a disciplined one. Take a reduced size ahead of the print, or wait for it to clear the fee question, then add. The risks all point at the same number, the take rate. If fee compression accelerates at the August 13th print and guidance comes down, the stock likely gaps back toward its low $12 support, the bear case. Emerging market currency swings feed the same margin line, and a sharp slowdown in volume growth would remove the one thing that is unambiguously working. The floor under it is the valuation itself, a 9% cash yield, a big buyback, and a pristine balance sheet. Now weigh the risk against the reward. The bull case is roughly 39% above today, the base case, the most likely, about 19%, and the bear case, a fall of about 21%, so you are risking about 21 to make 39. So, I'll call on DLocal, on NASDAQ, buy. Remember, this is for education, not financial advice. Always do your own research. This analysis is by DLocal Investment at DLocal.ca. The link to the full report is in the notes below. Have a great day.